The price action in the session thus far. Right now, we're down 264. S&P down about 1%. NASDAQ down a little bit worse than that. Yields ticked higher today. The data came in a little hot, right? Consumer confidence beat, jolts ahead of estimates. The 10-year note yield is at 3.11. And I mentioned in the open here, we're at a critical level for stocks, Josh. Just about at 4,000. We're below it, just below it by 10 points or so now. It is a level that many, including you, are watching very closely.
Yeah, one of my favorite technicians, Ari Wald at Oppenheimer, talked about this over the weekend, where very clearly the S&P 500 got turned around, almost stopped on a dime, right at its falling 200-day moving average, which has now happened multiple times this year. And the rising 50-day is the most obvious place if we're going to find some support or at least a place for the sell-off to pause. That might make sense. Obviously, we're below that level right now. We're a long way before we get a weekly close. I tend to focus more on weekly and monthly closes rather than daily because life is too short to get caught up in every whipsaw. But bigger picture, even if we were to find some support at that level, it's very hard for me to take the macro picture and believe that this is it or that's the worst it's going to get. So all year long, I've been telling you there will be bear market rallies. They will end all the same way with a lot of disappointment. Looks like this one from July to August is yet another on the list. And now what we're facing is a situation where the housing market in price terms is starting to fall apart. So the last thing I want to say here, U.S. sales of existing homes down another 6% in July. That's 6 months in a row of declining sales. 30-year fixed rate hanging high, 5.95%. That is an untenable situation for that housing market to recover. I think you're going to see lower lows in prices of homes for sale. I think you're going to see inventory numbers start to balloon higher. And the problem with that, unfortunately, it's great for one portion of the population, younger people trying to buy their first home, but 15 to 18 cents of every dollar is housing market related. And that is a very, very substantial part of our economy that is now going into its own recession for the first time. And I don't know how much of that is in the numbers for things like overall consumer confidence, et cetera. So this is where we are. You don't have to like it. You don't have to agree with it. But this is what price is telling us is happening. The bear market continues.
Bryn, you got confirmation this morning, and I read those data points of an economy that is still strong. The problem with that, of course, is it's probably too strong for the Fed. And you got a lot of Fed speak out over the last 24 hours. It's Bostic, it's Williams, it's Kashkari yesterday afternoon talking about how he's, glad to see the reaction in the stock market after Powell's hawkish speech on Friday. And you run up against what you've been telling us not to do for months, and that is fight the Fed.
Right. That's where we are. I mean, I think Chairman Powell has been dealt, since he's become Fed chairman, probably one of the trickiest times that a Fed chairman has had to deal with, probably since Paul Volcker, for totally different reasons. And I think that what's happening right now is the market, when Chairman Powell came out and was so crystal clear, like, hey, guys, I'm not kidding. I'm not going to be Arthur Burns. I'm going to be Paul Volcker. And we are going to keep rates higher for longer until we know for certain inflation is not going to rear its head again, which is a tall order. And so we are in this position right now where the market is recalibrating what multiple it wants to pay for stocks. And so I think what Josh hit on housing is so interesting about what he said was obviously so spot on, but the conundrum that we're in. And so all the stats he gave you about new home sales, it's all about new home sales are racking up, but we are still structurally very undersupplied in overall housing. And so we are going to be in this situation where rents stay higher, energy stays higher. And so I just think that the market has not priced in that we actually have longer inflation that's stickier. And that's where I just don't think we're going to have this V-shaped rally over the next couple of months in the market just because we're in this time period. And I will say it's okay if stocks are down this year. I've said it all year long that stocks go down. We've had an amazing 10-year run. If we're ever going to have a negative year in returns, I feel like this is probably it. But that's okay because that's the price of admission for an equity investor, is to sit through these time periods.